It's Katie Clancy, Chief House Hawker at the Cape House at William Raveis, and this is the Cape House Show, where we give you the tips, tools, and sense of humor you're going to need to get through the biggest transaction of your life. And today, we're going to talk about getting through the biggest transaction of your life, through the biggest crisis you've ever dealt with in your life, a pandemic, and how to deal with specifically some mortgage issues and mortgage questions. And to help answer those questions, I have invited Frank Merola of William Raveis Mortgage to help sort of answer some of these questions that we have and walk us through the other side of this. All right, so Frank, thank you for coming to the show.
Thanks for having me on the program. I do have to disclose my NMLS number.
Please do.
It's 1020051. Thank you.
All right, I'm looking that up right now. Hang on a second. Oh, damn. Oh, no. No, all right, he's good. He's good, you guys. Phew. All right, so Frank is our in-house mortgage expert and mortgage rep, and he takes care of a lot of our clients. And he's also the person I go to when I read mortgage news and I don't understand it. And so he's an incredible resource. And I was reading recently that the Federal Housing Finance Administration Director, Mark Calabria, says that he thinks the COVID-19 related delinquencies on mortgages won't be as widespread as some in the market have predicted. Now, that's not necessarily a popular opinion. A lot of people think there's going to be some problems with people being able to pay their mortgages, what with everybody losing their jobs and all. But we've got forbearance in there, and I think that's the big question. Forbearance is designed to give people a break on their mortgage. Can you help us understand what forbearance really means and what we should do with it?
Yeah, great. And I'm sure a lot of people are hearing in the media and on Facebook and various other sources about the topic of forbearance. And the way that works is, and if you look at this crisis compared to, say, 2008, back in 2008, we had a crisis. It was an economic crisis. The auto industry needed to be bailed out. Housing values came down, and a lot of people needed some help. The difference back then was they had to prove hardship to get any help. With this crisis, what people can do is they can go into what's called mortgage forbearance, and they really don't need to prove hardship. All they need to do is say, I've been affected by COVID-19. Now, the important thing that I think people need to understand is that forbearance is not forgiveness. So if you contact your servicer, your bank, your lender, and you go into a forbearance program, say a 6-month forbearance program, then you don't have a mortgage payment for 6 months. And come month 7, now you have your mortgage payment plus the prior 6, lump sum. And a lot of people don't understand that. They think that I just don't have to.
Whoa. Time out. Excuse me? So, okay, so you could, that's insane. You could go, all right, so great, I have 6 months off, but basically what they're saying is, yeah, but still save 6 months mortgage payment and then give it to us on month 7?
Correct, yeah, give it to us lump sum, which, obviously a lot of people are not gonna be prepared for that.
What's the point? I don't even understand how is that forbearance at all? That's horrible. Yeah. I think some people are gonna get in big trouble there.
And the other thing that I'm concerned with too is some people, listening to the media may think, well, I just don't have to make my payment and not contact their lender or servicer. And then what's going to happen is those people will have their credit impacted. So it's very difficult right now just to get a hold of the servicer or the banks or the lenders. The phones are very, very busy. So my advice to people is, if you can make your mortgage payment, you should. And you should really understand what forbearance is, get it in writing. So that you don't have a big surprise, 6 or 12 months down the road.
Yeah, so it's funny, I hear the word forbearance and it doesn't have a positive connotation. I don't think people should be too excited about it. It's really delaying the inevitable. And before we started recording, what you said is there's no free lunch. It's not like you never have to pay that money. I did hear there are some circumstances where people, they might get 6 months off and they're just adding 6 months onto the end of the loan. Is that happening too?
Yeah, so some of the situations people could go into what's called deferment. Now that may allow them to add it onto the end of the loan. But I think what most likely will happen, and we're seeing this change daily, is that after the 6 months, most likely what will happen is the servicer or the lender will take the lump sum payment, divide it by 12, and spread it over the next 12 months. So if somebody had a $2,000 mortgage, probably their mortgage would go up to maybe $3,000 for the next year. And hopefully that would be comfortable. But I think, again, in situations where people are affected, it may be a challenge. And the other thing is there are a lot of people that could make their mortgage payment who are going to go into forbearance just because, why make it if I don't have to? And that could end up hurting the industry.
Yeah, and that is actually something that I think a lot of people are concerned with. Like if people just, I mean, listen, some people are really going to need to take advantage of it. It's not like it's not there's ain't nothing free. Like there's no way to get out of it. But so we all think of things in terms of like our bills and we have to pay our mortgage and our electric bill and all that stuff, but money has to flow, right? Money has to keep moving for it to flow to you. And so if you stop the flow of your mortgage payments, so everybody's like, oh, the bank taking my money, but like they gave you money. Actually they gave you a lot of money so you could live in that house and pay it back over time. So they earn interest. So those guys have bills to pay. Exactly. The servicer has bills to pay. They've got investors, and if you stop that flow, what could happen? Like, what are the consequences?
The consequences could be enormous. So, let's say, you make your mortgage payment to your servicer, and we've all heard of Wells Fargo. So let's say your servicer is Wells Fargo and you go into forbearance. Wells Fargo still needs to pay your real estate taxes and your insurance, and they still need to pay the ultimate investor that owns that loan. So some of these services could be facing liquidity issues and be facing some dire economic circumstances. Hopefully the article is true though, and it won't be as bad as was previously predicted.
Yeah, no, and it's entirely possible. Well, no, that it won't, but that's one of the reasons I wanted to talk to you about this and make sure people understand that when you say liquidity issues, you're nicely saying that some of these parts of the mortgage industry could go under.
And another very important topic too, since you're a real estate agent and you specialize in buyers and listings, is anybody that may be looking to make a move next year, say in 2021, if you do a mortgage forbearance, it means that you're not paying your mortgage as agreed, and then that could be problematic to getting a mortgage down the road or refinancing. So it's very important to understand what's being offered to you and to try to avoid it if you can.
It just doesn't seem like forbearance seems like an absolute last resort that people should be taking. I don't see any, there's no, because there's consequences to taking advantage of forbearance. It's going to affect your credit. It's going to affect the industry. It could hammer you next year. You could end up and it sounds like different servicers and different banks have different ideas of what their forbearance looks like. So you could end up in a heap of trouble next year. You think you're in trouble now, it's like out of the frying pan into the fire. So I think whatever anybody can do to pay their mortgage, pay it. And if you can't, you can't. And you might have to take advantage of forbearance, in which case make sure, like you said, I'm going to stop giving advice at this point. My only advice is be as proactive as you can. But for specific tactical advice, what would you say, Frank, people should be doing if they know they're gonna struggle at least a month or two on their mortgage?
I would just definitely say reach out to your financial institution, whether it's a mortgage, whether it's an auto loan, whatever it might be. We have been seeing some tighter guidelines with credit scores. We have been seeing some investors sort of get out of certain types of loans. So William Raveis Mortgage has a big menu of loans, and that menu is slightly shrunk in the last couple months. So it's very important that people protect their credit scores, try to pay their bills on time as quickly as they can. And if they are struggling, to reach out to the financial institutions to try to work something out. Okay,
so what I'm hearing is just in general a theme of proactivity. Pay your bills if you can, reach out if you can't. And in fact, when this all started to go down, my husband and I like our bills are fine, we're doing fine, but we're like, we don't know what's coming. So we started making phone calls right away. And we're like, listen, I know we're current and we intend to stay current, but we're a little nervous about what's happening. Just giving you a heads up. I gotta tell you, our creditors were like, thank you. Yeah, we can work with you.
Yeah.
That seems to put you in a good stead. They take notes on that stuff, and you want to be prepared. Believe me, I'm the last person who wants to talk about like stressful money things. I'm like, oh, but like you have to deal with it. And you made mention of another thing which I think is important is there have been some, and I want to kind of get all the way to the punchline on this one so I don't sound like such a Debbie Downer, but like there's been some changes in, you know, people's sort of, first of all, the choices of borrowing options have narrowed a little bit, and the pool of borrowers has narrowed because they're not accepting, like the minimum credit score has gone way up. Now that's all true, but from what I understand, and you got to help me out with this, Frank, we anticipate this to be a temporary situation. Tell me more about the bad news and the fact that it's going to end. Tell me a good story, Frank.
Yeah. So it's not all doom and gloom. You know, I heard somebody say this week that, you know, in the past mortgages were being given out like candy, and that's I guess a good phrase. And we are seeing some tightening of that. So maybe some of the candy is being taken away just the last couple of months. And it's been a crazy couple of months. I mean, there's daily guidelines changes. It's evolving daily. But what I think that we have seen is some investors have said, hey, we're not doing jumbo loans for until we say we are. And I think that eventually when things normalize, these loan programs that may have been paused, you know, will come back. So I may have 20, 25 different lenders that'll do jumbo loans a month ago. And now we may only have 18 or 19, but we still have them available. It's just that some people are being cautious, you know, in this market. I think that the guidelines will relax, and I think that these loan programs, you know, will come back, you know, once we go normalize. I can say it's been a great spring for me for refinances. This month alone, I've had about 7 closings, and they've all gone through. So we've been able to, you know, mortgages are going through, banks are lending, appraisers are doing appraisals. It's not business as normal, but business is, you know, is being transacted. But obviously, you know, some of the verifications of employment are getting, you know, stricter. They want to make sure people are working and have an income before the loan closes. So we just have to, you know, we have to deal with these changes.
It is what it is. Like, you know, it's again, nobody, you know, you don't like it when you're on the receiving end of it. You're like, oh, why I have to show you all these invoices, blah, blah. You know why? Because some people lie. That's why some people lie about the money that they're making, and then they get a loan and then they can't pay it. And that's bad business and bad behavior. And we know you're a good guy, but this bad guy ruined it for you. So sorry, just do it. And, you know, if you're actually in business and, you know, making what you say you're making, it shouldn't be an issue, honestly. So we do kind of have to take, you know, just do that. There was something else that you mentioned. We were talking about forbearance and when at all possible, for a million reasons why to just do everything you can to pay your mortgage. You know, I don't think there's a lot of people around here who would shed a tear if they saw Wells Fargo go under, just from a personal perspective, even though they have no idea what an impact that would have on the industry. But it's not just the Wells Fargos of the world that would be in danger, right? Like, we have all these wonderful local banks that also rely on these mortgages. Am I right? Like,
we have great local banks. I mean, we have amazing local banks here on the Cape, and they obviously do a lot of mortgages. Quite a bit of their business is mortgage products. So if all of a sudden most of their clients turn around and say, I can't pay my mortgage, or you know, some of them take advantage. Yeah, some of them take advantage of it when they could. Then the consequences for them, you know, could be enormous. So we don't want to see that happen to a loan servicer, a bank, or financial entity, you know, or a mortgage company.
We all, and it's just another theme of like, we've got to try to take care of each other. We've all got to get through this together. And so I've seen a lot of things online about, you know, the ways people can save money or not. And I know that's not, you know, your jam, but there are some really cool resources, and I'll try to find some and put them in the comments where people can, you know, like, that's one of the first things we did. We called the creditors, and then we went through our bank account. We were like, cut that. We can always bring it back in. Like, we just ruthlessly cut stuff out. And also some of it, like, I shouldn't have been paying for that anyway. You know, stuff you're like, how often do you really look if you're not
Yeah.
really paying attention? But
And I can say the same thing. I mean, during this crisis, I feel like I haven't been going out. I haven't been
right.
spending any money. So that hopefully, and a lot of people are in the same position, and they'll be, you know, putting their bills first, and, you know,
Yeah.
protecting their credit and doing some of the things that we talked about.
Yeah. Yeah. That's so those of us who lived through the housing crisis in 08, 09 remember it all too well. And so that's, I think a lot of us are like right on top of it. Like we are not messing with this. It was actually interesting to see, for me personally, to see how we responded to it after having gone through such a hard era. It was an era. And, you know, like we are not screwing around this time. Like, we are going to be okay. So Frank, you're a font of knowledge and wisdom for me. Is there anything else that you wanted to make sure people knew or understood about kind of what's going on in the mortgage industry right now?
Yeah, I think the overall, you know, message I want to give to people is that, you know, like as a mortgage company, we're 100% digital, and we're basically, I don't have to meet with clients face to face, which luckily for me, I don't have to. A lot of it is phone and email and internet based. So we are still lending. We are still locking loans. Appraisers have been given some relaxed guidelines to protect their health. So a lot of times an appraiser now, instead of having to go into the home, will just do an exterior drive-by. So they have,
Yep.
We do see some, you know, some relaxed guidelines with appraisers, and also rates are great. I mean, rates are mid threes.
Yeah.
Historically, that's amazing for a lot of people. So I think that, you know, once we get back into our spring market here in Cape Cod and people are buying houses and second homes, you know, it'll be, you know, things will be back to normal. And I also think that maybe, you know, we've had a really strong real estate market. We've had multiple bids, you know,
Yeah.
highest and best by 8 o'clock Sunday night. So maybe that will calm down a little bit, and then it won't be as frustrating for buyers to purchase property, you know, this spring or this summer when things normalize. So maybe that's the silver
Yeah, that's
lining.
possible. Yeah.
Yeah.
No, I think there's going to be a lot of really good things that come out of it. There's no way to tell, you know, what it's going to be yet, but I think, you know, day by day we seem to get a little bit more of a picture of what to expect. So Frank, if people, I mean, I'll share all the links to contact you, but if they want to call you, what number would they call?
Yeah, they can contact me. I use my cell phone exclusively, 508-740-5922. You can call or text me. And, you know, like, you know, we work together quite a bit. You know, in the mortgage world, I'm just like Katie Clancy. I work 24/7, days, evenings, weekends, part of the job. So feel free to reach out if you need.
And that's actually, you guys, if you're not like in the market for a mortgage right now, you might not understand what a big deal that is, but like you're not shopping for a house Monday through Friday, 9 to 5. You're shopping for houses on Saturdays. You come home at the end of the day and you go see a house, you make an offer. You know, you've got to get it in by 5 and you need a pre-approval letter. Frank will set you up. He handles that stuff. He's so responsive, and all weekend long, it stuns me. I really can't believe that there are people who call themselves mortgage loan officers who are just only available during like 9 to 5, Monday through Friday. I can't even believe it. And there's actually, I know you know this, Frank, but there's mortgage companies who have zero digital capabilities. Zero. They were still faxing. Like that's as digital as they'd gotten, and they hit this crisis and they're like, wow, guess I'll get an email. I don't know if it was quite that bad, but like, wow. So there's what Frank and Raveis Mortgage, I think, brings to the table is we've got this like totally touchless experience that's actually extremely high touch. Like Frank is really accessible. You won't get him. You know, we can arrange to meet in person if you want, but you don't ever have to. So we're not held up by, oh, meet me here, meet me there, or but I'm in Boston and I'm buying a house in Orleans. Like, it doesn't matter. Frank will handle it.
Yeah.
So
yeah, that's great. You know, I get to go to closings. I do get to meet with people. A lot of times people want to, you know, put a name to a face. So, but the great thing right now, when we're not supposed to be together, is that most of the mortgage can be done virtually, which is great. So it allows me to, you know, keep going on.
yeah, and you keep us posted too. I got a notification today that one of my clients' loans is a conditional commitment, like in record time, in the middle of a maelstrom. Like what? I was blown away that happened so fast. But Anyway, all right. Well, thank you so much, Frank. I really appreciate it. And this will not be the last time you were on here. This is too good to not keep sharing. So I will
Okay.
see you the next time. All right.
All right. Thank you for having me on.
Thanks so much, Frank. All right. Take care.
Okay.